Let's get ready to roll, guys. July 18th, 2019. It's Thursday, and we're going to cover a bunch of stuff today. The most important thing is after yesterday, everyone has turned into a bear, which equates to a perfect time to actually be a bull. The one thing that points out to a bullish, not just any bullish, but a strong bullish reversal today is the historic analog. It officially confirmed the second down day yesterday that we've talked about in yesterday's video. And today we're expecting rocket ship high. Despite of the fact that you may be thinking otherwise by looking at the futures action after hours and pre-market, we're going to take a closer look in just a sec. Number two, VIX has hit a total reversal yesterday from us pointing in the triple bottom end of VIX. It's got to the upper tunnel of our trading range so fast that at this point we're considering it as a dead cat bounce, which is actually going to fade away over the course of the next 72 hours. Number three, based on the 13 markets move formula, after a move 5, if we get 2 bearish days in a row, on the third day, we actually has an 82% probability of a move higher. I've actually went back, studied all the statistics on the moves, and it's astounding how when you get a move 5 top situation, in instances where it was followed typically by a move 3 or 2 or 2-3 top combination, was exactly what we're looking at over the course of the last 2 days. The third day was actually had a highest probability of a 1 or a 7, in certain instances a 4. So with that said, we got multiple things pointing to a move higher, despite of the fact the futures are temporarily down, at least at the point I'm recording this video. Now, number 4 is temporary reaction to Netflix creates finally a buying opportunity. All these institutions, they've been complaining how things are too high. They can't find any deals. So clearly the FANGs were dropping yesterday in the reaction to Netflix move in solidarity. All FANGs, they typically have a positive correlation. So when one of them drops, it typically impacts the other. Very important to know that last year on July 17th, we actually predicted a drop in Netflix. What was important is to observe the earnings of the other FANG stocks. The next one to report was Google and actually shoot up substantially higher exactly 1 year ago. The next one to report was Amazon. That one went higher. So pretty much every FANG stock after the unfortunate drop in Netflix has actually moved higher. And I think that's exactly the kind of setup we could be going into here this year as well. So it does create a buying opportunity. As you noticed, all the FANG stocks were dropping after hours. They were doing it on low volume. Low volume drops create a bullish opportunity. Notably, ASML, the semiconductors, keep doing extremely well. It's hitting an all-time high. When you have a stock hitting all-time highs 2 days in a row, it has a higher probability of continuing the move. So we're considering ASML calls. Google calls because we think they're going to start buying Google in the expectations of the earnings. Same thing with Amazon. Despite of all these things that are happening, guys, Amazon just keeps getting hit with a bunch of bad stuff, but it hangs in there strongly, and I think it's going to revisit the levels of 2020, 2030 relatively easy by Friday, and we could be heading to an all-time high still on Amazon literally within days here. So just because it's slightly down pre-market does not mean that it cannot stage a huge move higher today, guys. So with that said, what makes us think so is the Capitol Hill divergence that we pointed out yesterday, right? All the techs were supposed to get hard, seriously hit hard, but they didn't. They actually, on a crazy day like the Capitol Hill massacre, they maintained their levels pretty strongly. Despite the Amazon getting hit with an antitrust lawsuit in Europe, it trades rather smoothly. Yesterday, yes, it's down, but you know, typically on something like that, I mean, stocks get hit pretty hard. So what I'm saying is stocks really show in relation to the kind of news and typically the type of news that would take them down quite a bit. They're showing relative strength and they're not dropping. They're only dropping just a little bit. And when they're doing that, big moves higher could be just around the corner. And we're going to take a look at the Netflix trade. We're going to break it down specifically how you should be trading Netflix today. With that said, let's take a glance at the historic analog. Basically, we're saying from the video yesterday, the big move higher is just ahead. We're getting closer to these big moves. We're literally within 10 days from this sharp move, about a 7-8% move higher. Okay, and what makes us say so If we take a look, this is exactly where we were yesterday. Let's zoom in again on this thing and one more time. Yesterday was July 17th, so this was exactly in a historic analog. Yesterday, 2 days, we're getting to move 2, we're getting to move 3. Today, we're staging this big white candle followed by a gap up potentially tomorrow. So this is where we are in the historic analog. Now, buying next week's calls may not be ideal because you see what happens next week. Next week, we're just going sideways, 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 sideways. Not very big moves. But the most important thing out of today is you will see S&P regaining that level of 3,000. And by tomorrow, we're going to be trading back above that. And so this is very, very important stuff because overall, it would maintain the uptrend if you connect the dots here, right? So this was the down day where stocks reversed when we were heading lower and they reversed. So if you connect this dot, and this dot, basically creates a solid uptrend. And this is exactly what we're seeing when we're looking at our tunnel, right? So breaking through the top part of the tunnel is what we did a few days ago. And now, pre-market, actually last night after the market closed, we dipped to this level, which is the lower part of our trading tunnel on S&P futures. So if you are new and you're not familiar with this term, the trading tunnel, you want to buy calls when you're trading in the lower part of the trading tunnel. You want to collect some gains when you hit the higher part of the trading tunnel. And we're basically at this point, if you look at the after hours action and pre-market action, okay? So here's a snapshot from about 7 a.m. on July 18th. Basically, this is our lower trading tunnel. 29.74 is the level out of which after hours we bounced out of like 1, 2, 3, 4, 5, 6, 7 times. Okay, so this is a very nice bottom which coincides with the bottom in our trading tunnel. So from here we can easily get back up to this yellow line, which is a level about 3,010, 3,015 over the course of the next 48 hours, considering what our historic analog is showing us that could easily take place. Let's talk about the Netflix earnings. Okay, Netflix earnings, guys, take a look at the history. It's not a question of whether institutions will buy Netflix shares on this dip. That is not a question at all. They will do it. But the question is whether they will start buying it today, tomorrow, or Monday. So they will start buying this dip in the next 72 hours. Now, here's what history shows us. Some of the worst earnings misses in Netflix history, where it was completely off on the numbers, and drops between 10 and 20% has taken place. Statistically, Netflix continued the drop for 3 days after that initial drop in 64% of the cases. Now, in 2 instances where Netflix was down more than 17%, buy the dip happened instantly. Okay, as soon as the market opened, they started buying the dip. Now, we're not down 17%. So we shouldn't be assuming that all of a sudden as the market opens, they will be buying the dip like crazy. There's actually 2 scenarios that we're going to reveal to you right now. It should make your job easy on how to trade this thing. Now, the question is, what can we actually learn from Domino's DPZ earnings report and how we can lay it over to the Netflix trade? And you may be thinking, well, what does Domino's have to do with Netflix? So let me show you. The reason we want to take a look at DPZ because we study behavioral patterns in stocks. And DPZ is one of these stocks where historically it has a high probability of reversion after being down after reporting the earnings. And so in that way, they're similar. Yes, one is a technology stock in a way, and the other one is a restaurant stock, but they do have this one thing in common. They do have one connection, and that is how they react to the earnings. And on top of that, they both like really, if you look at the charts look, they resemble themselves highly from the standpoint of the magnitude of the moves and so on. So in this particular case, Netflix is down roughly 10%. Domino's reported earnings 2 days ago. It was down 8%. So here's was that initial drop. This was initially happened to Domino's Pizza. So from the 275s, and basically drops all the way to 248. That was the initial response. So that was roughly an 8% drop compared to the 10% drop in Nflx. What happens next? So we send out the alert, hi, you buy the dip in DPC. So those that got in early, hey, that was a nice trade. Unfortunately, like me personally, I only locked 1/3 of the position on the gains here on this pop. So from 248, it goes to 265. It's amazing. The stock is down 8%. It stages a 7% reversal right off the bat. Okay? And after that, it unwinds this bounce, creates a move 11 right here. And the next day, as pointed out in the video yesterday, we said, hey, it's going to visit this level of 245 very likely before it further bounce. So it actually hits 244.79 and it bounces from there to 253. So at this point, instead of a 7% drop increase right here on the bounce, it's a 2% increase. So what can we learn from here? I think there's a good probability Nflx is going to resemble this once the market is going to open. Now, what I'm not saying is Nflx is down 10%. I don't think all of a sudden it's going to stage like a 7 or 8% rally. Okay, but it's reasonable. I'm actually going to give you specifically what area I would be taking some profits on this quick Nflx trade. So far, let's take a look at the Nflx reaction to the earnings. So far, it's down, as I mentioned, about 10% in 320. After hours, actually did hit a low of 314. Keep this number in your mind because it does have importance. And so far, pre-market shares are just going nowhere. They're not trading. We're not seeing any huge bounce. We're not seeing anything good going on so far, with the exception of some analysts that are actually maintaining strong buy on Nflx, but at the same time as they're maintaining the strong buy rating on Nflx, they're actually slashing their price targets to $450. So, which is bearish. But basically, scenario number one, we could see Nflx do exactly what Domino's did. Initial bounce, like literally within the first 30 minutes to an hour, it could bounce strongly and it's going to stall out and it's going to drop. And the question, of course, that you would need to know, okay, well, if I'm buying Nflx calls at the open, how far is this bounce going to go? The answer is simple. Let's take a look at this daily chart. You're going to see this level. So we're trading under this red line right now, about 320. So the level that should be targeting is 338. So keep that number. The important numbers on Nflx today, guys, is 314 and 338. And so 338 is going to be your level of resistance on Nflx. So it makes sense to start taking some gains there. So if you're getting into the trade, and clearly I'm recording this around 8 o'clock, so in an hour and a half, anything can happen. Nflx could actually open slightly higher, but considering that it's going to open around $320, it could easily stage a rally to 338, start taking gains right there. There is a probability it could actually hit the second target of 345. So basically, you want to get in at 320, get out at 338 to 345. So maybe sell half of the position at 338, half of the position at 345. Boom, there's your trade. Okay, after that, you can reverse buy some puts, targeting that level of about 320, 314. Now, that's your first scenario. Now, the second scenario is it could actually easily retest the lows that were set yesterday at 314. So we could be in the first 15 minutes of the open, we could be looking at a revisit of these levels. And sometimes these levels may not be precise. So we're targeting 314, but sometimes what they do is they go slightly below that. So we can actually go see 313, 312, 310. I would actually be a buyer on the put side, especially if this move happens really, really rapidly, all the way to 300. So if it drops, if it stages like a quick drop to 314, I would start buying some calls there with full understanding. They actually fall to 310 or 300. But 314 would be my target to start buying a few contracts there, a few at 310, a few at 300. Now, we may not ever get to the 300. We may just stop, let's say, at 309. So that's why it makes sense to start buying some contracts here, but knowing that it could go lower and be prepared. Now, clearly, when you're using the strategy, the closer in the money you're buying, the more sense it's going to make. And considering the history, what expiration would you guys want to buy? Well, I would split the expiration between this week and next week. Again, in many instances, they will buy the dip rather quickly in Nflx, but because we only got today and tomorrow, if the bigger buying activity is going to begin Monday, then you could be missing out on that major move that could actually take the stock maybe to like a 350 level by Monday, Tuesday. So to protect yourself, you definitely want to split your trade between different expirations. Maybe buy some for this week, buy some for next week, and buy as close to in the money as your account. Markets move sequences. Yesterday was officially a move 3, guys. This is how it looks on the chart. Okay, so we started trying to hit this triple top right here in the morning. This was the level we've actually predicted we were going to hit, 29.90 level, and we strongly bounced out of that, and it looked like we're out of the woods because we were creating this reverse head and shoulders here, but then we got hit one more time with this. So the notable part, the most crucial part out of these move 3 is, again, yesterday we have mentioned that we're noticing a shift in the behavior. The behavior from being a highly bullish behavior when institutions are buying stocks into the last half an hour of the close. We're seeing the second day in the shift of this behavior. We said if we see it 2 days in a row, it's time to get extremely cautious. So there's definite signs here that we're watching going into the close today. If this behavior does not reverse today, we're going to reconsider some of our bullish stance and we're going to soften it up a little bit. A lot of things, majority of these things are still pointing to a strong bull move higher. However, this temporary switch in the behavior is a concern. So ideally, for the bullish move to materialize rather rapidly, we do want to see a switch from the sell behavior in the last 15 minutes to half an hour of the trading session to seeing the spike on the volume on the move higher. So yesterday in the move 3, and why this is a move 3 is continuously we created a series of lower highs, and this behavior of a sell-off on stronger volume into the close. That's a perfect move 3 right here, guys. The 2-day sequence is 2-3, so we get 2 bearish moves in a row. Not to be concerned because the magnitude of these moves is not strong, and the VIX even with this spike in the volume on the sell side going to the very last half an hour of the session, VIX could not even break 14. Now, we're going to take a closer look at the VIX and what it's doing this morning to give you the whole picture. But basically, here's your move 2, here's your move 3. In both instances, we have the spike in volume going to the close on the sell side, which is different. This is totally different behavior from what we have been witnessing over the course of the last 15 trading days. So we can tolerate 1 day, we can tolerate 2 days, but now if we get a 3rd day on the sell side, guys, it's definitely going to be time to reconsider some of these positions. But for now, we're going to hang in there on the call side and really watching the last part of the day to see if this behavior is going to change. I think this behavior is going to change today. We're going to see some buying activity going into the close, but we definitely want to get a confirmation of that before we put any more huge bullish positions out there going into next week. Again, be very careful because based on the historic analog, there's a great probability which is going to be moving sideways. So in comparison, to show you this bullish behavior activity on volume was happening on the ways higher, and now we're getting a shift in this behavior. So that could indicate a trend reversal, but it's not 100% confirmed because everything else is still bullish. The 5-day sequence is 77523. Here's the most important thing about these sequence. When you have a series of bullish moves followed up by 5, in some instances, rare instances, in most of the instances in a sequence like that, you'll have a series of bullish moves, continuation moves like another 5 or 4 or another 7 or so on. In this case, in very rare instances, you'll get it 2. And it'll be reversed to a bullish behavior. You can get 2 red days. And if we study the history of the market moves, typically on the 3rd day, after these 2 red moves, you have an 82% probability of a green move. So that's why when we're looking at the historic analog and we combine our sequence with the historic analog, the market moves tells us there's actually going to be a move higher today, not a move lower. And when we lay it over on what everybody's talking about in the news today, everybody is ready to be a bear, which is easy to be a bear after 2 down days. Now, if we're looking at the chart, if we're looking at the actual sequence, take a look. Okay, all we are, I mean, you can connect the dots. 1, 2, 3, 4. I mean, connect the dots. It's just a solid uptrend. and we're stalling out at these levels where it really makes sense to buy at the lower end of the trading tunnel. So far, there's really no break in the trend, and it makes sense to actually load up on calls at these levels. But be careful, watch the end result of the behavior going into the closing part of the hour in the trading session. Okay, today we are looking at a move 1 or a 7 based on all the things that we've just discussed. As far as the VIX, the bounce off of the triple bottom that we discussed yesterday is likely to fade just as fast. VIX traded nicely yesterday, quite bullish from 12.5 to 13.5 to 13.94, closed at the highest level of the day. To review the tunnel in the VIX, 14.7 is where you want to short it, closer to 12 is where you want to buy it. That was the concern yesterday. We pointed out, we said possible triple bottom coincides with the lower part of the trading tunnel, and this is this right here is 1, 2, 3 triple bottom in the VIX, out of which it starts to bounce. And what we're really getting as a result of that, right before that, we have the head and shoulders. So from head and shoulders, we get to the triple bottom. That transition was so fast, right? So now that we're back to this top part of the trading range, we're at 14.5. At 14.5, 14.6, 14.7, we're top part of the trading range in the VIX. From there, it typically drops. And many times, over the last few months, when VIX actually gaps up higher, it's been rather bearish in majority of the instances for the VIX. During the day, it actually gives up those gains. So this is the picture I was taking pre-market about 7 o'clock. So, just expect the VIX to actually fade that move higher throughout the day. The key takeaways are such, guys, that buy this dip in the market at the lower tunnel range. Buy in the money calls. Start building Nflx calls at the open. Close them if the move higher to 338 happens within 30 minutes to an hour. If initial drop to 314, buy calls there and add all the way to the 300 level. And in that case, focus on buying next week expiration with potentially move starting higher, could initiate as early as today, as late as Wednesday. And the most important thing to observe for the day, to remain bullish and to keep putting in these bullish positions, we got to make sure that we see a shift from the selling behavior into the close into a buying behavior into the close. And we're going to have to adjust our positions if there is indeed going to be a third day of selling going into the very last 30 minutes. With that said, guys, trade like a rock star, make some money. Let's roll. I'll catch you on the next trade tomorrow morning.